One of the biggest gifts to investors this year has been Alphabet. The parent company of Google has seen its stock surge. Coming up, we'll speak to a guest who predicted it and find out why the shares did so well. Plus, he'll share his 3 picks of stocks that could have similar-like returns to Alphabet in 2026. So let's get started. This is Ticker Take.
Happy holidays, John.
Happy holidays, Caroline.
Well, some people are opening their presents. Other people are opening up their brokerage account to find out that this year's biggest gift was Alphabet.
No kidding. Google's parent company's stock surged, and we did have some Ticker Take guests early on who had recommended Alphabet, including Matt Weinschenk of Stansberry Research.
Yes, let's hear from Matt on what made Alphabet the standout stock of the Magnificent Seven.
Yeah, Alphabet's got a great story with AI, and if you follow it along like we have, it really tells the story of the whole AI ecosystem. And if I can go all the way back to 2022, which was the start of the generative AI era with the release of ChatGPT, people at first thought that was a Google killer. And it was, that was GPT-3, which now seems so rudimentary to us now, but it was amazing what it could do. And the fear was, well, if you could just ask ChatGPT these questions, who's going to go and search for stuff? So Google shares declined. But Google was not far behind, in AI. They had their DeepMind division. They were working on AlphaGo and AlphaFold. And they even had large language models that they were working on because they invented the transformer, which is the architecture that allows these things to work. So it was only, I think, 5 months after ChatGPT that Google released its Bard competitor. It wasn't exactly as good, but it showed that they were already working on this before. They weren't caught flat-footed. They were just a little more conservative, and when they wanted to release a product, and ChatGPT sort of showed them up on that. And then Gemini 3 came out in November, and it was really good. Like, it was definitely a step ahead. It beat GPT-5 on virtually every benchmark. People liked it a lot, and it sort of shook the market and let people know how well Google was contending here. But at the same time, in November, Google announced that it was considering selling its TPU processors to outside companies. So NVIDIA has been dominating the GPU market. All the AI compute is done with NVIDIA chips. There's just not enough of them out there. But way back in 2015, Google said, we're going to make our own chips. They're called TPUs, for tensor processing units. So while everyone else was trying to get these NVIDIA chips, they had this supply of their own chips that helped them train cheaper. But now they're saying they may sell those to outside companies. It looks like Meta might be the first one. And that's going to be a huge opportunity. If they can take even a little bit of NVIDIA's advantage away, that's just going to be incredible for them. So you had the advances in Gemini, you had the TPU chips coming out, and Google stock surged in November. But even since June, I think it's doubled this year. It's been a good performing Mag 7 stock, but it's really caught fire as it's come to the forefront of AI.
Okay, with that said, we asked Matt what stocks he thinks in 2026 could have similar Alphabet-like returns.
Yeah, and Matt got to work, and here's how he did his analysis.
So if you're looking to find the Alphabet of 2026, there are some special things that help it have this success that I think you can find in other companies. And they're very important, and they're very unique to sort of this AI era as we go from chatbots to turning AI into putting it in other software and making it a part of our daily life. So one thing you need is capital. AI is not cheap. Software used to be a business where you could code it up and then you could sell it at zero marginal cost, is what they would say, right? A new user doesn't cost you anything. AI is not that. It takes now billions to train these models. Inference is expensive. So it's much harder to be a startup in a garage without billions of dollars at this point. So you need capital. Google, of course, makes tons of money from its advertising business. I think more than $100 billion in free cash flow a year. So while OpenAI and others have to go and raise funding, Google is creating it on their own. So you need capital. Number two, you need an audience. An audience is the most valuable thing you can have today. Probably more valuable in capital or factory or anything. If you need an audience to get in front of people, and you can see Google has this audience for their search business. And since so many businesses need to get in front of that audience, everybody's got to pay the Google tax. And they've gotten better and better at capturing more of the value that their advertisers generate. Their prices going up. Google advertising gets more expensive every year. But that audience is also what helps them with their models because they've got more than 1 billion users in Gmail, more than 1 billion on YouTube, Google Maps, Chrome browser. So they've got all these people using all these Google products. So if you want an AI that reads your email and puts an appointment on your calendar and gives you a map to go to your meetings and knows what you like for lunch, so they tell you where to eat while you're there, Google has all that already. Whereas OpenAI is going to have to build integrations with your email and a map service, and it's going to have to ask you to put your data in there. So the point is, ChatGPT is good. People go and they use it. Gemini is good, and they can just put it in front of people. And that's why Alphabet has 650 million users compared to 700 million for GPT, which had a first mover advantage. So you want that ready-built audience. It's so much better than starting from scratch. And third, you have to be down this road. You have to have a history of innovating. You have to have a culture of innovation. You have to have good technology. It's very hard to catch up to these companies. Google's been working on AI for probably 20 years. So starting from square one is very difficult. So you want to find companies that have already been doing these things. Those are kind of the three things I think that will help you find the underappreciated AI companies that are set for a good 2026.
All right. Now that we understand Matt's thinking, let's get into the 3 stocks he picked for 2026.
Absolutely. But first, a friendly reminder,
This is not financial advice. Stock number 1, Adobe.
Well, Adobe came up on a recent edition of Ticker Tape. We spoke with investor Zach Hartley. He likes it. Now, remember, the shares have had a rough year, partly because of concerns about the AI impact on the company. But when you look at the outlook for the business, there are still some big profit expectations from analysts who, on average, really like the stock. Here's Matt's thinking.
Adobe has this product suite of creative products for photo editing and publishing and all these things. You probably know it. And when generative AI came out, the fear was, well, why would I use Photoshop when I can just go ask Nano Banana or GPT image generator for a cat wearing a Santa suit or whatever you want? So it struggled. I think the shares are down by about half. Before that, it was an incredible business, incredible returns, buying back tons of shares, huge margins because of their subscription model. But people thought that it might be displaced by AI. And they've got a challenge ahead of them, and they've got to do things right to keep ahead. But what they are doing is integrating AI into their products. They have the audience, right? So they're putting it in front of their audience. And the way it works is essentially they have an app called Firefly. You go into Firefly and you can select all the other models you can use. You can use Gemini's model. You can use ChatGPT to generate images. You can also use Adobe's own model, which is designed to be copyright friendly, which is very important for a lot of businesses. If you use that, you won't essentially get in trouble for infringing on anything. So that's a nice value add. I don't know how many people need that. But the point is, you go in, you generate your image. It's sitting there in Adobe's products where now you can edit them, you can fine tune them, you can share them, you can remix them, because it's very hard to get exactly what you want out of the large language models so far. And just to put it simply, like, these chatbots are not the end of AI. The AI is going to be integrated into things. It's going to make products stickier and more useful. And that's exactly what Adobe's doing. So people were concerned whether this would work. In the last quarter alone, we started to see some real evidence that it was taking off. Subscriptions to Firefly doubled quarter over quarter. The number of tokens generated with generative AI tripled quarter over quarter. Revenue's up 10% over last year, which is good growth for such a large company. And so after those recent earnings, it shows that they're really sort of making the right moves to get people into these products, that it's resonating with people. You can see the inflection on the chart after that earnings. So all these companies have to adapt. They have to work through this. They have to innovate. But Adobe is doing the right thing so far, and it's much cheaper than it was 3 or 4 years ago. So I think it's going to be an AI winner this year.
Stock number 2, Salesforce.
This is very much like Adobe, a stock that has been in the doghouse this year, partly because of AI worries, even though with their latest results, they proved some of the doubters wrong. And when you look at the analysts' expectations, most of the street likes this stock, thinks it can climb in the year ahead. Let's hear from Matt on Salesforce.
Salesforce has been doing something similar to Adobe. They are proving the doubters wrong. And if you don't know Salesforce, we call it the OS for business. Its ticker is CRM because it makes customer relationship management software. And if you have a company, you can essentially run it with Salesforce. It's pioneered the software service model, got hugely successful. 150,000 businesses use Salesforce, some of them paying millions of dollars a year. So it was fantastic. It was a great stock. But AI comes along. And again, there's a fear here that AI makes coding easier. So maybe you can just code up your own little CRM, your custom software for your business, and you don't need Salesforce anymore. So that was the fear. Salesforce shares have struggled a bit. But as AI coding gets better and more people use it, what you find is it's not really about writing code. It was never the hard part there. The hard part is speaking to different parts of the company, taking requirements and matching them up, getting access to different databases. And it's an organizational challenge, not just a coding challenge. So I think that Salesforce can still sit there. They can still have their customers. Once you build on Salesforce, it's very hard to move off Salesforce. It's extremely costly, which is why they have such a sticky business. So I think Salesforce will still sit there in the middle and help businesses coordinate these things. But the opportunity for them is if you're a business and you're running on Salesforce and now you're excited about AI and you want to integrate AI into your business, well, Salesforce are going to be the first people you reach out to say, how do we do this? So Salesforce launched Agentforce in 2024. And it's a way to put AI agents into your business. The most clear way to think about this is like a chatbot on your website, a customer service thing. But as an agent, it's not just there to answer questions, but it should be able to do things, right? It should be able to interact with other parts of your business, change your password or whatever it may be. And Salesforce launched this 2024. They probably overpromised. They probably were a little early. The struggles were real at the beginning, but if you listen to the company, they had to train up 15,000 sales executives for how to sell and how to deploy Agentforce. And in 2024, when they were talking to customers saying, hey, you need an agent, people didn't even know what they were talking about. They didn't understand what agents could do, why they would have it. Now people are much further along in that conversation. So in the most recent quarter, Agentforce is really starting to take hold. I think they've hit $500 million on a revenue run rate. And the usage of it, the tokens generated, I think has tripled. So Agentforce kind of rolled out with some trouble. Now it's catching its footing. Again, you can see the inflection in the stock price after that earnings because people see that we're moving into this implementation of AI era, and Salesforce has the customers, has the capital, has the technology to get it done. Again, they got to do it right. They got to figure it out, but they've got as good an opportunity as anyone.
And stock number 3, Synopsis.
Yeah, Synopsis is a stock that has been a home run over the long term, but this year, not so much. But again, like the other names we talked about, Wall Street generally really likes this company and sees the potential for upside. Again, let's get over to Matt.
So Synopsis makes the software to design semiconductor chips. So obviously semiconductors are a huge deal. Everybody wants them right now. They're selling out, and you hear about NVIDIA making chips and Taiwan Semiconductor running the foundries and ASML making the equipment. But when a designer sits down to create a new chip at NVIDIA or at another company, they use Synopsis software to create the blueprint, so to speak, and you can do what's called virtual testing and see how it'll work. So it's for engineers making these chips. They are the market leader. They compete with a company called Cadence, but they've got the biggest market share by far. And they've got great margins. I think 70% gross margins, 15% profit margins. Those are supposed to go up over the next 2 years. But what you see happening is an expansion of our need for chips. We don't just need more chips. We need different kinds of chips. So like we said, Google's making their own chips. Amazon has one called Trainium. Meta says they're going to make their own chips. Rivian, the electric car company, just said they have their own chip for self-driving now. And what's happening behind all this is that Moore's law is slowing down. It's getting harder and harder to make chips keep advancing. So the response to that is to work more on what's called the packaging of the chips, and also to make custom chips for custom applications. Instead of a general purpose chip, you make one that's specific for something, and you can squeeze out better performance. So as AI progresses, as it spreads through the economy, as people need more and faster chips, there's going to be more chip design. They also just did a huge acquisition of a company called Ansys. This was one of my favorite stocks before it got bought out. And that does software for more general engineering. But if you look at America, if we're reindustrializing, if we're bringing manufacturing back on shore, we're switching from combustion engines to EVs and all this stuff. We're really at an inflection point for industrial design. So that Ansys acquisition is going to look really good. Still digesting that just happened. So if you're looking for a beneficiary of new AI chips and what we need, Synopsis is the way to go. They've got the capital. They've got the audience in the engineers that are trained to use Synopsis software. And they're just sitting in exactly the right place for this boom in custom chips.
All right, that's our list of 3 stocks that could follow Alphabet's great year in 2025 with big performance in 2026.
Our thanks to Matt Weinschenk, and you can learn more about Matt and Stansberry research in our description.
Where you can also learn more about Ticker Take, from the podcast edition of Ticker Take to our free investing newsletter.
Happy holidays!